Hello, welcome back. Again, my name is Ben Berlin with Berlin Enterprises. We are a full-service real estate investment company. We buy houses, we sell houses, we have rental properties, we rehab houses, we do high-end stuff, we do lower-end stuff, multi-units, commercial stuff, land development, spec house building, all sorts of exciting stuff. We subdivide land, everything to do with real estate. It's brought me from a place just 8 years ago that I never dreamed that I would be here today. It's just unbelievable what the power of real estate does. And my mission has become to share what I've learned, and I think I've learned the fast track because that's just the way I am. I go full bore with everything that I do, but my goal now has become to help others experience the same thing and get what they want out of life, get free of a job, build wealth, build that financial foundation, be able to travel, be able to have the toys. That's become my mission in life, and that's my plan to do with you. This is video number six or seven, I think. It's actually based on a one-on-one course that I offer. One-on-one with students. It turns into about 20 to 22 hours of intensive one-on-one training. There's a lot of fun involved in it. It's a lot of work. I expect a lot out of my students. I expect a lot out of my employees. I expect the most out of myself. That's just the way I am. But it's a lot of fun, and I hope that I can convey at least most of what I offer in this course through these videos. I'm already getting a lot of good response. It's kind of exciting. It's amazing how many people are already saying that these videos have touched them, have kind of changed the way that they think, and it's very exciting for me to hear that. So please keep giving me feedback. I also want to mention a couple other opportunities. Cryptocurrencies, I think, are going to absolutely be the next big thing. I think they're going to be bigger than the internet. There's one in particular that I'm relatively heavily invested in. I've already started to see massive returns on that. I would love to talk to you about that. You always can contact me at ben@berlinenterprises.net, my personal email address. I always get back to you within 24 hours about. And another opportunity is an opportunity if you have good credit and credit cards, you can make very good, very easy money, never making a charge, and offers no risk to you or your cards. So I'd be happy to chat with you about that. Again, ben@berlinenterprises.net. I wanted to mention too that these videos are always real time. There's no editing. There has been an occasion where there is a little blip in the video that I had to just cut and paste it, but it really was real time. There's no editing in them. It's just as if I was sitting here alone with you, interacting on a one-on-one basis. So I hope you get out a lot out of this. We just got done talking about mindset changes and self-development, which I think there's a ton of good information in. I encourage you to re-watch the videos, watch them again. I think I had maybe 4 or 5 videos in that section, about 15 to 20 minutes long each, and I think there's a lot of very good information in that. I talk fast, I cover a lot of stuff, so I encourage you to watch them and watch them over again. Really let it digest. Do the things that I suggest. Read the books that I suggest. Do the exercises. And it's very important. I mean, this is an all-inclusive, from start to finish, set of training and manual. And I'm actually turning this into a book also, so that's another thing. Books are very time-consuming to do them. About 75, 80 pages into that. But I'm excited about that. That's another project. I have a million projects going on at this time, but I wouldn't have it any other way. Okay, so today we're going to get into some business basics, part 1. These are just some of the groundwork that you're going to need to track. And remember, we said in a previous lesson, if you aren't keeping score, how do you know if you've arrived? Excuse me. Pardon me, folks. Quiet that fax machine down. So you have to keep score to know where you are. If you're playing a football or baseball game, if you're not keeping score, how the heck do you know who's winning? You don't. So it's the same thing with finances, with with business, if you aren't keeping score, how do you know if you're winning or not? I mean, there's people that, that maybe have a great income, but they spend every last penny of their income. Maybe they have a negative net worth. And on the surface, it appears that they're wealthy, but if their income stopped, they would go under immediately. So you don't want to be in that position. You want to set up passive income streams. You want to know where you are financially at all times. And you want to always expand on that. And I mentioned in a previous lesson that you always want to know where you are financially, where your budget is, where your income and expenses, and then where your net worth is, which would be your assets and your liabilities. Those are the two most basic things that you want to know. So I'm going to show you those today on here, and hopefully I think you're going to be able to see this all right with red marker. I also want to mention, I'm not going to really be able to show you one-on-one how to do this. I do this with my students, but I kind of help them get set up with QuickBooks. So it's an accounting system, and it's a little bit different how you do that with real estate and rental properties, and some of the other businesses that we do. But I'm happy to help give you suggestions there and help you get set up. Again, I'm always available. Your accountant also, I'm not an accountant, I'm not an expert in that field, but I do have good knowledge of it. I certainly could help you get set up that way. QuickBooks Online is what I personally use for each of my businesses, and it works out very well. It takes some time now, but at the end of the year, when that's all you have to give to your accountant, you're going to thank me for setting it up like that, because otherwise it can turn into a real mess. So I'd be happy to help you with that. So as far as spreadsheets, I've designed a number of spreadsheets. Obviously, I'm not going to be able to show you the actual spreadsheet, but I would be happy to email those to you and go over those with you. More than happy to do that. So let's get started here. The first thing we're going to talk about is your budget and net worth, and I'll just show you a basic thing about that. So let's talk about a net worth statement first. And if you remember, we talked in a previous example, net worth. What is that again? You remember what that is? It's what you own minus what you owe. So very simple example, net worth. Let's say you own one asset. Now let's be careful what we categorize as an asset, because one of my other mentors, Robert Kiyosaki, likes to be very careful what you call an asset. He says an asset is something that if you stop working, it will continue to pay. Whereas an accountant's definition of an asset may be, like a car could be an asset. And that's true, and we're going to use a car as an asset. If you have a loan on it, it'll be on the liability side also. But you do have to be a little bit careful with that, because for net worth purposes, what you own minus what you owe, that is correct. Now, there is some interpretation as far as what things are worth. So you do have to be a little, you should be conservative in your estimation of what things are worth, because it can skew your net worth hugely if you overestimate something's value. It can make it appear as if you have a good net worth when you actually don't have a very strong net worth. And you don't want that. We want to be conservative in these estimations. But I want you, for this purpose, yes, say like a car an asset, but I want you to always be thinking about the assets that we want to acquire. And we want the majority of our assets to be the Robert Kiyosaki definition of assets, which is an asset, or most of the time an income generating asset, something that when you aren't working, when you quit working at it, money continues to come in on it, it continues to appreciate, or it continues to pay down. So like an investment property, that would be a Robert Kiyosaki asset, because somebody else is paying on it, it is appreciating in value, it's being paid down on, you have depreciation expense you can claim on it, and it's paying you month after month after month in the form of rental income. Whereas a car, what happens if you quit working? The car payment doesn't make a payment itself. It's going to keep costing you gas. It's going to keep costing you repairs and inspections. Okay, so do you kind of see the difference between those? There's a very distinct difference. I want you to always have the mindset of buying these income generating assets, but know for this purpose that we will put something like a car or your house as an asset. Just estimate them conservatively. So for net worth, Uh-oh. This marker is not working very well. Let me check another one. Try a green one. You're gonna have to pardon my, oh my gosh, this isn't working either. How about a black one? Here we go. Net worth. Okay, so over on the, typically, can you see that all right? Yeah, I think you're going to be able to. All right, so typically what you're going to do is on the left side, you're going to have your assets. All right, this marker is not working very well either. I think we're going to have to get out the big guns, the Sharpie Magnum assets. So right here, over here, you might have several columns, and we'll make this simple, but you're going to want to probably modify it for your purposes. But you know, we'll start off very simply. So first, we're going to have liquid assets, and so this will be liquid. Okay, I'm going to write big, so I might take a couple pieces of paper because I want you to see this clearly. All right, so liquid assets would be cash. Okay, that's the most liquid. Liquidity is a measure of how quickly something can convert to cash. So obviously cash is 100% liquid. Okay, so the quicker it can convert to cash, the more liquid it is. So, you know, maybe a piece of real estate isn't very liquid because you would have to go through the selling process. That can take several months, you know, a year sometimes if it's not priced right. So it takes a while to convert to cash, so it's less liquid. Something like a stock, that's somewhat liquid. You can usually sell a stock in, you know, that day, typically most of the time. You know, it might be several days before you get the money, but stocks are pretty liquid. So you would have, so liquid assets. Okay, you would have, so maybe you would have a column for cash. You might have a column for stock account. Okay, you might have a column for, you know, what else might you have? We're going down in order of liquidity, so you might have gold and silver. Okay, now you get less liquid as we go down, so liquidity. You don't have to go less liquid as you go down, but I think it makes sense to do that. It's a way of organizing it for you. I think it makes sense to do that. For this purpose, we're going less liquid as we go down, okay? So then, you know, you might have a retirement account, and this would be physical gold and silver. Excuse my writing. So then you might have, you know, you might have vehicles. You might have houses, okay, etc. Okay, so those are all just an example of assets. So how I would do this if I were you, so again, from the most liquid, we have cash, you know, then maybe stock account, and then maybe physical gold and silver, retirement account, vehicles, houses, and on and on. And those are all perfectly good examples for assets for these purposes, okay? So those would be examples of assets. Now I'm going to show you how to put this all together, but that's the first example for assets, okay? So, liabilities. So then on the right side, you're going to have liabilities. Okay, what are some examples of liabilities? Typically, they're what you owe on things. Okay, so let's break this down into three simple sections. Okay, Oh, another asset that just popped in my head right now could be accounts receivable. If you have a, if rent's receivable or accounts receivable, if you're a business, accounts receivable, that would be a measure of, payments that are coming in that you know are coming in. That's another asset, okay? So liability is going to be on the right side. Let's break this down into three simple ones. Let's do unsecured liabilities. Let's do secured liabilities. And then maybe let's have a column for taxes owed. How about that? Very simple. So some secured some examples of secured liabilities would be mortgages. So say mortgage 1, maybe that's the mortgage on your house, probably the mortgage on your house. Most people, if they only have one mortgage, it's the mortgage on their house. In a case like me, I have dozens and dozens and dozens and dozens of mortgages, of course. So then, maybe you have mortgage 2, and then, mortgage 3, and on, okay? And what else is a secured? Let's think about this. What else could be a secured liability? Maybe a loan on your car, okay? So car loan, okay? What else? Maybe you have a loan on a 4-wheeler or something. So, 4-wheeler loan. Okay? What else? Unsecured. So let's think about those. What are some unsecured liabilities that you might have? How about credit card payment? What's the difference between unsecured and secured? First of all, let's establish that. Secured is something that is a loan that is backed up by a collateral, a hard asset. So like a mortgage on a house, like we mentioned, that is backed up. It's secured by the piece of real estate. It's secured by the property. If you default on the loan, the bank takes the property so they can sell that and recoup their money. That's a secured one. Same thing with a car loan. If you default on a car loan, what happens? The bank, they come and take your car away, right? So they can sell it. With a unsecured credit, like a credit card, well, it's not secured by anything. If you default on it, there's nothing they can take. Well, they can try to get a judgment on you, and they can try to lock your bank account, and there are ways around that, which I'll explain in later things, but there are ways around them ever having to get anything from you if you do default on an unsecured card or line, but that's a later lesson. But let's talk about this. So unsecured credit card payment 1, a CC payment 1. Maybe you have 2 credit cards, so you have payment 2, okay? What else could be an unsecured? Maybe you have a credit line, a business credit line. Maybe a family member loaned you some money and you owe them back. That would be another example of an unsecured credit line. And then finally, for these purposes, let's say the last liability is taxes owed. Everybody owes taxes. Whether it be property taxes that you owe at the end of every year, or whether it's, maybe you owe, regular income tax every year or something like that. So you can put taxes owed. I think that's a good one to have in there. Taxes owed, whatever that might be. Okay, so that would be some examples of liabilities. So what we're going to do is I'm going to put the two of these together now, and you're going to see how we get a budget net worth. I'm going to make it very simple. And you're going to, yours is probably going to be much more complicated. The more stuff you have going on, the more complicated it is. So now, let's say you have a column down the middle. Okay? Assets here. Liabilities. Okay. So let's say we have, bank account. Sorry about that, guys. All right, let's say we have a bank account here, number 1. So checking. Okay, let's say that checking account has $10,000 in it. Okay, let's say we have savings account. Let's say we have $20,000 in that. And let's say we have brokerage. Say we have $100,000 in that. Retirement account. Say we have another 200,000. It doesn't matter. I'm just making these numbers up entirely. Okay, so let's total our let's total these ones. I like to break it down into like you know, maybe so I like to break it down into checking, savings, you know, retirement, brokerage, just like this, and then maybe have a column for vehicles and then a column for real property. So let's add these up. 200, 300, 330. Okay, I'm going to run out of room, so I won't do a ton more here, but let's just say we have, you know, our car. Let's say we have our Aston Martin. Worth, say, 180,000 bucks. Okay, and let's say we have, well, that'll be the only car we'll put on here because we don't have much space. Let's say we have our personal home, 400,000 bucks. And let's say we have a rental property. So rental RP, rental property. Let's say that's 150,000 bucks. All right, so in cars, we have 180. And in property, we have 550. Okay, again, I'm gonna make this simple. So 550, you know, you're going to have a ton more assets, I'm sure. I mean, there's going to be, you know, like some other stuff we mentioned. Just think about everything we have. I mean, you could include, you know, furniture in your house. Maybe you have some collectible stuff. Maybe you have a coin collection. Maybe you have gold and silver, like we mentioned. You know, maybe you have an art collection or a watch collection or fine jewelry or computers. Or I mean, there's a ton of stuff. Anything that you could sell and get that money out of. I mean, that's an asset. Anything like that can be an asset. But I'm just breaking this down very simply for you. So what's 330 and 180? What the heck is that? That is 510 plus 550 is $1 million and $1,060,000, right? So the total there is $1,060,000. Is that right? I think that's right. Whatever. Even if it's off 10,000, it doesn't really matter for these purposes. So this would be our total assets in this example. Okay? So now on the other side of this, on our liability side, what do we have here? So basically what you want to do is you want to look at like each one of these things and see if there is a liability associated with each one of these things. So a checking account, 10,000 is, you know, there can't really be a liability associated with that. So, you know, that would be a 0. Savings, 0. Brokerage, that's a 0. Retirement, 0. Okay, but then you get to the Aston Martin. You know, maybe you have a loan on it. You know, maybe you don't. But let's just say for our purposes, there's a $80,000 loan on it. So Aston loan, 80,000 bucks. Okay. And let's say your personal home that's worth 400,000 bucks. Let's say you have a $350,000 loan on that. So P home 350. That's a liability. Remember. And again, you can group these however you want. I break them down into things that make sense to me. You might want to break them down into whatever makes sense to you. I would actually probably break this down by itself. 80. And then personal home, and then rental property that's worth 150,000. Heck, maybe you've owned that for 10 years and you've paid it down to 50,000 bucks. So let's say you have in your RP, so you go 50 grand on it. All right. But let's say too, on the flip side, let's say you have some credit card debt. Okay, maybe for whatever, maybe you use credit cards. Maybe you took a $20,000. Maybe you pulled $20,000 out on a credit card to use as a down payment on the rental property when you first bought it, and you haven't paid it down yet. You know, that's a very legitimate thing to do. Just calculate the payment on your card and make sure the rental property covers it. Or maybe, maybe you just racked up debt. Who knows? Who knows? But say you have a credit card. CC payment, or CC balance, not payment, excuse me. Balance, say you have $20,000 on that. Okay, what else could be liabilities? We said taxes owed, so let's say at the end of the year you're going to owe $10,000 in taxes. Okay, what else could be liabilities? Basically anything you owe anybody. Anything you owe anybody is going to be a liability. Just think about what else could be. Any payment, any balance, any student loan, I mean, that's a liability. Any accounts payable, that could be another liability. You can get creative. Just think about it. I could rattle off 1,000 things that are liabilities, but you can get creative thinking about this. When you start exploring your own personal, situation, I think it'll come clear to you. All right, so let's add these up. So actually, I guess I should have left a little more space. Real estate debt is 400. So let me sneak that in there. A little small, but there's a 400. Credit card balance 20, and their taxes are 30, so there's a 30. All right, so what's 400? So we have 400, we have 30, and we have 80. So 480 and 30 is 510. So our 510,000 is our liability. So now what? So you have your assets, $1,060,000, and your liability, $510,000. So what does that mean? That means you have a net worth of 490 and 60 is 550, right? 490 and 60, yeah, 550,000. So in this case, your net worth, is $550,000. Does that make sense? What you own minus what you owe. In this example, your net worth is $550,000. So that's that's fine. That's a good place to be. So how can you, like I said in a previous example, you want to wake up every day asking yourself how you can increase your cash flow and how you can increase your net worth. We're already at 28 minutes. I'm getting carried away here. But this is just a minor, just an example of the net worth. I want to go over your budget next video we do, because that's another very important one, because you always want to think how you can increase your cash flow and how you can increase your net worth. Well, here's an example of your net worth. So how could you increase your net worth? Let's think about that for a minute. What can you do? Well, you can either increase these numbers, right, to get this bottom line higher, or you can decrease these numbers, right? Both things. So these numbers can increase. How can these numbers increase? Okay, you can work harder and harder and harder and save more money. These cash accounts can go up. That's one thing. You can save more. Your brokerage accounts can go up. You can buy real estate. What about that? What if you are able to buy a $100,000 property for $50,000? What does that do? And believe me, those deals are out there all day long. I buy them every day. I buy $200,000 properties for $50,000 and $70,000 and maybe put a little bit of money into them. But think about that. What if you buy a place for $100,000 that's worth $200,000? What does that mean? Well, you immediately increase your equity $100,000, because you have a $200,000 over here on your asset, and a liability side. Well, if you paid cash, your liability would be zero over here, but your cash count would go down by that 100K. But if you got a loan, you'd have the 200 over here and 100 over there. You just increase your net worth $100,000. So can you see, if you keep doing these real estate deals, your net worth, it can skyrocket. Again, people can make awesome salaries day in and day out and make a huge salary, but they just spend money. They're not increasing their net worth. They could even have a negative net worth, because these numbers over here could very easily be bigger than these numbers over here. A negative net worth is not a good place. If you get sick or can't work, you're going to be claiming bankruptcy immediately. So you want to always build that net worth. again, by increasing these numbers and decreasing these numbers. How else? How can you decrease these numbers? Well, you can buy, again, investment properties that the tenants are paying on, for one example. So every month, every single month, these numbers pay down. Every month these pay down, you don't do anything. I adjust my net worth maybe once a quarter or so. And at this stage, with my rental properties, it's unbelievable watching how much they pay down. My net worth goes up very, very substantially every quarter. Every day it does, but if I do it every quarter, I see that just by the properties paying down every month. They're paying down. And guess what? I'm not paying on it. My tenants are. Or when I, land contract something out, my tenant buyers are. Or when I sell a property, I make a big chunk of money. It increases. What does it do? It increases this, right? And gets rid of the liability over here if there's a loan on it. So you can see how all these can interact. It's very fun. I love doing numbers. This is very fun, very powerful. And I think that's going to be it for today. I'm getting a little long here. But I think this is a good one. I can't wait to talk about the budget next, and I'll go over some other ones with you. Again, Ben Berlin, Berlin Enterprises. You can email me personally at ben@berlinenterprises.net. I look forward to having a one-on-one relationship with you. Keep on listening to these. Keep on doing the homework. Practice some of this stuff. You're going to literally start doing this. You can do it on paper. I'd recommend doing it in Microsoft Excel. That's it's made for, stuff like that. If you don't know how to use Excel, just YouTube Microsoft Excel lessons. You'll immediately, there's lessons all over the place that'll get you started with how to use Microsoft Excel. Very powerful program. Again, folks, I wish you all the best. I wish you success. And until next time, I can't wait to talk to you again, friends. Here's to your success.